Folks, welcome to Sunday Night Stock Charts Live, or the Futures Live, I should say. I got it wrong. So what we're going to do today is we're going to go over some of the headlines. We'll let the futures markets open up, and then what we'll do is, this will help, right? What we'll do is we'll first discuss the headlines. We'll let the futures markets settle down, and then we'll take a look at those markets. And what we're going to do also is talk about the Federal Reserve and its balance sheet last week. Where have they been? Where are they going? Also, we have a push on the Brexit deal. The 31st of October, that date is now dead. The EU put out an offer, or floated a headline that they were going to accept an extension by the British, and I believe the British have now offered or accepted that extension. I believe that is now part of the news. So that is going to be interesting in terms of what it means for the dollar. Does the dollar catch a bid? Because the dollar has been a safe haven when it comes to negative news on Brexit. But is this really negative news? If you're a Brit, in my opinion, it's negative news. If you're part of the European Union and you're a Remainer, it's good news. So we'll see how the dollar reacts to this. The dollar was very, very weak last week, and I think it's all a part of a grand plan, and that is to weaken up the dollar. We have more action over in the Middle East. We have a major blaze over at one of the major refineries over in Iran. We'll see what that does to oil. So before we go to the headlines and we talk about what to expect this coming week, I want to talk to you about our podcast. You can catch this replay and whatever else I put out there live on at current. It's Spotify, Google Play, and you see these graphics here. This is the podcast dashboard that I have. You can log on here now. There's a link below, and these graphics are just generic. Apple rejects this thumbnail here, believe it or not, and I have a graphic designer working on a new header and a thumbnail. I've been wanting to do a podcast for a while. It's really a growth thing out there, and I know a lot of people just can't sit in front of a video screen all day long or at night, what have you. People are busy. They're doing their own thing. So if you're at the gym, you're able to listen to replays if you're not able to catch the live streams or any of my videos. So right now, Google Play is a thumbs up along with Spotify. Apple early next week. Fingers crossed on that one. Also, I'm going to close out the survey soon. I'm trying to put together courses. Many of you have already taken this survey. It's the same survey as a couple of weeks ago. It's linked down below on YouTube. It's also going to be on the website when I replay this. So if you could take this survey, it's very brief. I don't ask for any personal information. It's just feedback from you. It helps me to know who my audience is, what their pain thresholds are in terms of trading, and that way I'm making courses that address the problems and not what I believe is a problem, and maybe it's not really a problem. So it helps when you give me feedback. That type of direction helps me to really hone in on a problem, analyze it, and provide a solution, hopefully. And with that, before we begin, if I could ask you to please, I already got a like. Thank you so much. I appreciate that. Those who are filtering in right now, if I could ask you to click that subscribe button and click the bell button as well, because that'll notify you of when I go live every single time, and that way you don't miss any of the live streams. And click that like button. I love YouTube. It's the basis of my social media for the Contrarian Trader. I generate a lot of activity off of YouTube. I love them. They're a great partner. But frankly, what they're doing now is they're not pushing the small independent producers' commentary. What they're doing is they're pushing CNN. That's propaganda. They're pushing Fox News. They're pushing CNBC rather than the little guys. So please, the like buttons really help out. And let's get to it. I've wasted enough of your time. That's the opening. Let's kick it off with an overview of where the markets are at month to date. So we are still up on the month despite the price action on Friday. And I discussed with members yesterday on the week ahead commentary, which is posted in the members area. Hey, Bill. How's Zurich? Good for you, man. You skiing? That's great. I've never been to Switzerland. So I lost my train of thought. So the S&P 500 is up on a monthly basis. Last Friday, we had some negative price action. And going back to on the week ahead commentary, we did a rundown of all the averages, the subsectors, the real key subsectors. There are a couple of that I'm really bullish on: the financials and the healthcare sectors. That includes biotechs, pharma, healthcare in general. I'm going to go over a symbol called CURE in a moment. It's the leveraged ETF of the HLV, the healthcare ETF. So I'm going to go over that chart in a moment. And net, I remain bullish on the market, but I have to say, I say I'm bullish with a lot of trepidation. I'm concerned about the Federal Reserve and their actions. I'm concerned about the fact that there are just no adults left in the room in Washington. And that you know what, that goes for everybody in Washington. Everybody. I'm not eliminating anyone of any party. It's just disgusting what's going on right now. There is no fiscal plan. They are going to run these deficits higher until eventually become a third world banana republic. And it's just so very, very sad. The Federal Reserve is run amok. They're calling it not QE. Those who are excuse makers for the Federal Reserve, I think it's horrible. They can't admit failure, and this is not going to end well. We will be positioned for when we roll over, but as of right now, I do not believe that these markets are going to roll over in the short term. After the 2020 elections, different story. We will be looking to get short of this market in a very, very, very big way. Blockchain Bull. Thank them. Blockchain Bull. Put in there. Hit the likes, people. Love that. Thank you very much. Appreciate that. Samuel. Hey, Bob. I just fall in love with the NEE trend. Unlucky. NEE, is that a symbol? I'm assuming. Okay, we'll take a look at it. And Baba, you got it. So let me write these down. Sam is always around. I love people who will participate and keep me busy. And I could talk stocks all night long, folks. So let's keep those on the side, Sam, and we'll get to them for you in a little while, okay? So that's the S&P 500. Right now, we're looking good. Path of least resistance remains higher. No reason to get bearish just yet. The powers that be have the back of this market. Let's go to the news. So CNBC, this was pumped up only a couple of minutes ago, and I just had a Freudian. I meant to say popped up, pumped up. CNBC pumping up the markets already on a Sunday evening with stocks. They know this. Stocks will likely hit new record highs in the week ahead if earnings keep topping expectations. Let's talk about earnings for a second. You had Boeing and J&J take a nosedive last week. Yes, they have their individual issues. You had the banks with mixed earnings. So all we've had so far this quarter in terms of earnings are the money center banks. And yes, JP Morgan had good earnings. Netflix, disappointed. They spiked higher, then reversed, lower on the week. So I'm not exactly sure where they're going here with such a small segment of earnings having been reported thus far. These are not the high beta names, excluding Netflix. When the high beta names come out, then I want to talk about how earnings look. It's way too early just yet. This is more pump and dump out of CNBC, so I ignore it. 40,000 Headman. Just remember that Jay Powell said that he didn't want to have a large ongoing presence in the asset markets. Yeah. Yeah. He's already got it planned out for 2020. They're going to be a part of the wallpaper from now on. They're never ending this. Never, ever. So I think that the only regret that the Federal Reserve has right now is that they ended QE, because then they have to restart it. Now they have to be confronted with the fact that, hey, what happened to the other QE programs? And that's why they don't want to call it QE. It was a failure. And now they're going to double down on failure. What is the very definition of insanity? It's doing the same thing over and over again and expecting a different outcome. Here is the Federal Reserve. These are their numbers, not mine. Here is their balance sheet. For those out there that leave comments saying that the Federal Reserve is not expanding out their balance sheet, there has been no announced QE. Folks, here is a max view of the balance sheet. Here is the last month and a half alone, this hockey stick up higher. I think it's about $170 billion worth of investment into the banks. You want to hone down here? Take a look at this spike higher. We will be over $4 trillion on their balance sheet again by the end of this week. So stick around. This is going to get really, and this is just the beginning. This is just the beginning. So why do I think stocks are going to push higher? Ultimately, they're going to resolve themselves to the fact that the Federal Reserve is in there buying up everything that they can buy to keep this party going into the 2020 elections. After that, who knows what's going to happen? So here is the headline off of Zero Hedge with regard to the pound. And anybody that's watching over in Great Britain, if you could just leave a comment, what's the average man saying over in Great Britain? We've had some folks from Great Britain on the live streams in the past. They provided good insight. I'd like to hear what's going on over there on the street. Yeah, well, I think what they're going to do is that they're going to, ultimately what they're going to do is they're going to announce a new fiscal package. They're going to call it, like they under Obama did with the shovel-ready jobs. They're going to announce a big infrastructure build-out once this market begins to roll over. So that's going to be the next leg. So you're going to have the Federal Reserve up until the rollover. Then as you see jobs, unemployment rip up through the ceiling, then you're going to see Congress get together and say, okay, we got to get together with the president. We have to get a jobs package out there. We have to start infrastructure spending. Then you're going to have not just deficit spending on importing junk from China. You're going to have debt being loaded up onto the balance sheet and building out new infrastructure projects. Hopefully we'll get a high-speed rail someday. Negative rates on bank account from 2020 in Italy, if you have 100,000. Yeah. So Samuel's over in Italy. So negative rates on bank account from 2020 in Italy, if you have 100K plus. Below that, you're getting a different rate on that money. Can you clarify that? For all intents and purposes, here in the United States, you have negative yields on savings accounts at current. It's even worse over in the Eurozone, because what you have is, we'll use the worst case in terms of monetary policy at current, which is the United States. So you have yields, let's say at best, 2% at best on your average. You have some lower, some higher, on average in your savings account, and that's high. So you have inflation growing at the Federal Reserve's own number, 2.4%. So already inflation's eating into your savings. So you have negative yields. Then the money that you get paid for from the bank, you're going to get a tax statement at the end of the year. Not only is your interest being eaten away by inflation, you have to pay taxes on that money as well. So we're already well into the negative on savings rates here in the United States. So just for them to hold your money, you have to pay them. That's it. It's coming to the United States. It's coming everywhere. very, very soon. So that's another reason why you're going to see money pumped into the stock market, because right now, at current, the S&P 500 is yielding more than a 10-year Treasury note. And you have the possibility of upside appreciation. And I think that fund managers are going to start seeing that, and they're going to pump this market up higher. And if you take a look at this chart here, just on a weekly basis, monthly looks cleaner, but if you take a look at it on a weekly basis, we are just so extended here. And we had broken down back in 2018 when Powell put out that statement with regard to the Fed's balance sheet being on autopilot. Remember that? And that sent the markets lower. So at current, what we have is the market, which is just being pushed higher by buybacks. How are companies buying back their debt? They're borrowing it, and they're buying back their own debt. Wait till this market begins to roll over, and they need to raise capital, and they don't want to go to the bond market to raise that capital. They're going to start selling their own stock, and talk about an avalanche of selling. It's just going to be so bad. So what is our game plan? And I'm going to cut this short soon because I've really gone overboard here. We're already 16 minutes in, and I have just been yapping away. Our game plan here is simple. Our game plan is to stay long of precious metals. If we break out, we will buy the S&P 500. We will buy the Russell 2000. We will buy Cure, which is the leveraged ETF. We will buy some of the banks, not all of the banks. The regional banks do report earnings. I'm looking at those two sectors, healthcare and the banks. Believe it or not, the banks are setting up very nicely. I'm going to go to that in a moment for this rally. So why am I concerned about the banks? It's because their net interest margins are going to get squeezed by ever-tightening yields, lower yields. But you have the Federal Reserve that's pumping them up higher, so why not buy them? The Federal Reserve has got their back. Hell, they've decreased the capital reserve requirements for Deutsche Bank to do business here in the United States. So if they're doing it for a German bank, why aren't they going to do it for our own banks? 40,000 headwinds. Ben Bernanke in 2015. People no longer have the right to expect a return on interest. Yeah, right. That wasn't that prolific. Didn't he see this coming? Right, good. Thank you for that. Sad, but thank you for the share. Blockchain. But Bob, the new highs being sold into each and every time could be so bullish. How could I be so bullish? Especially when small caps, transports, and the financials have been struggling. What is your upside target? My upside target is 3,300 on the S&P 500. Blockchain, I'm not saying that the stock market should go higher. I'm not. I think that this market should be significantly lower than where it is right now. You have your macroeconomics, your globally, not just domestically, just horrible, horrible. You have the Federal Reserve that is propping up the banks. What's wrong with the banks? I thought this is the greatest economy ever. So don't get me wrong. I don't think that the stock market should go higher. I think it should go a lot lower. And every day I wake up, were I to buy the market now or on a breakout, I will be worrying that the next day I'm going to see bright red futures to the downside, and I will be hedged throughout the entire rally if I decide to get long. So don't get me wrong. I am not bullish for the reasons that we have organic earnings growth, or that the economic growth is sparking the need for stock prices to, or the valuations to expand. I just think that you have the 2020 elections, you have a very, very activist president, you have a Fed governor, chairman, who is willing to play ball now. His mind is right. You have so many reasons to keep this market afloat. And I think that the market's going to go up for all the wrong reasons. And that's why I'm saying after 2020, I'm looking to get short the market. And yeah, I agree with you. The reason why I haven't bought the market is that you're seeing selling into strength every time we go to break out. So I agree with your observations. I just don't agree that we're not going to get pushed higher. We need to look a little bit more holistically from a higher level view and think about the players involved, and they're not going to let this market go down. If they do, it's for reasons outside of their control, geopolitical events. I hope that answers the question. If not, ask for clarification, and I will certainly do so. He ordered the code deal, ring a bell. He ordered the code dead? What, I'm not sure what that means, 40,000. Oh, you're talking about Bernanke. Gotcha. Okay. All right, let's move on to the futures. Let's take a look at what we're doing this evening. I just extrapolated it out. The upper band of the rising uptrend channel on the S&P 500, and that's where it coincides with. That upside target on the S&P 500 may go higher if we break out, rally, trade sideways. Then with that upper band of resistance will continue higher. Then if and when we do break out again, the price target may get raised up to 34, 35, whatever. It's a moving target. So that in the short term, if we break out here, I think that we will go to 3,300 on the S&P 500. That's my target at these price levels, subject to change. After we rally, consolidate, maybe we break out, maybe we break down. Who knows? So that's my near-term price target. After that, I don't know. Cool. Glad I can answer your question, blockchain. Okay, so for those who are joining in, it looks like the audiences are getting bigger on Sunday nights. Thank you for joining. I love talking stocks. So please, if you're just joining in now, if I could ask you to hit that like button, I'd really appreciate it. It helps me out a lot with the YouTube algorithms. And thank you for joining and spending your Sunday night with me. Right now, what we're going to do is we're going to go to the futures markets. Let's take a look at what's going on out there. And the good point. Christmas rally is a must. Well, normally it is. I think last year was a difficult December, but that was seasonally odd, right? So typically, yes, we get the Santa Claus rally. So good point. Seasonality is at the back of the markets as well. Let's go to the futures markets. I'm going to pay particular attention to the dollar. Is the dollar catching a bid on the Brexit news and on oil? Because if oil's rallying, that means that we have another event over in the Persian Gulf that is causing oil to spike higher again. So let's go to the... Thanks for the likes, guys. I appreciate it. Wow, a whole bunch of them just jumped up. Thank you very much. Cool. All right, let's talk. This is natural gas. We'll come back to this. Let's go to the dollar. The dollar really got beat up. Yeah, here we go. Spiking up. Folks, we're going to use 4-hour charts here for the pre-market activity or the futures action on Sunday night futures live. Normally I do this at 5 a.m. Eastern Standard Time, Tuesday through Friday. So that's why I'm talking about pre-market. So at current, the dollar is ripping. So we are up. Why does it say we're down? This is saying we're down. We're not down. We're up. So the dollar is up. We're off the highs of the session, but we are up. We were higher. That's probably why. So nice move higher here on the dollar. How is that impacting gold? Now with gold, gold has been under pressure of late. We're up at current. Now we're long of the gold miners, and what we've been doing is selling covered calls on we're long of NUGT. We added more on the pullback last week. We are profitable on that trade for the year and for the trade that we put on last week. And we sold some covered calls again. They expired on Friday, worthless. And we're probably going to continue that, especially with the dollar, which is rallying. That's probably going to keep a lid on gold prices for a while, unless we have geopolitical risk, and then they'll trade in tandem. And you've been seeing that more frequently nowadays, the dollar and gold trading in tandem. Let's take a look at the stock market. You know what? Before we go to the stock market futures, let's look at oil. Oil is down, so it's really not catching a bid off of the Iranian news. So that is interesting because that's a pretty major event. Remember when that Aramco facility over in Saudi Arabia was hit, you saw oil spiking up higher. And now we're not catching a bid on the Iranian news. So not much action there, no impact on the markets. Let's go to the futures, stock market futures. All right, so we are up slightly. We are at current 29.90 spot 25. So going into tomorrow's action, I'll be looking for a rally up and through this upper band of resistance here. If we begin to break out above that resistance level, in all probability, we are going to break out on this market. And I'm looking to buy the S&P 500. I'm looking to buy the Russell, but I won't do it until we break out. I have price targets set. All last week, I made a point of hammering it home to members that please do not go buying this market until we break out. Every time we near that upper band of resistance on the S&P 500, on the IWM, on the Dow, whatever, we're seeing a pullback, and that's not good price action. You're seeing selling late in the day. Wait until the 3 o'clock hour. Monday long indices, Friday sell again. Yeah, and normally you don't see that, right? Normally you get Friday is a short covering day. That wasn't the case on Friday, so we'll keep an eye if that trend continues. So at current, we're up slightly on the S&P futures. No breakout, nothing to get excited about here. Let's take a look at the Russell. The Russell, very similar to the S&P 500. Not much going on. It's a quiet session. I just have that feel. It's a quiet session. And again, all I care about are resistance levels being captured and a close above those resistance levels. Absent closes above resistance levels, I'm a bystander of this stock market. I'm just going to watch. I'll own the gold mining stocks. I'll buy silver. I'll buy gold. I have one oversold play. That's Angie's List. That's it. It's speculative. We've traded a couple of times. It's done us fairly well. We're long of it again. But that's pretty much it. Very small percentage of my portfolio is long of the stocks. We're sitting on a lot of cash, looking to get long of the market, but we will be hedging this market. Let's take a look at the Nasdaq. Nasdaq is up. Now, here's what was concerning. Here was the price action on Friday. We were above resistance, right? We went into the day looking really good. We broke out, came back and retested. Then we came back and retested again, and it failed. So that's a major concern as we proceed into the new week. I do not forget breakout point failures, or they're also known as bull traps. And this is a bull trap. So very concerning that we're seeing this kind of price action. And that's why I will not buy the market until we get a breakout on a daily basis. And then we'll build on that position as we begin to break out to new all-time highs. So it's going to be a strategy of building in increments, not being aggressively long on a daily breakout. Because if this type of price action, a breakout and a failure, can occur on a 4-hour basis, it can certainly occur on a daily basis. So we're going to be really careful here, really disciplined, really strategic. Let's take a quick look at silver. Silver had a good week last week. It's down now. That's because the dollar's up in all probability, and we're retesting support. So it looks as though the metals, let's go back to gold really quick. Yeah, the metals they're consolidating. You have a bit of an apex here, a triangle formation. Maybe we'll break out, maybe we'll break down. Who knows? I'm not looking to add any more to our gold mining trade just yet. I'll probably, if we do rally, I'll be looking to sell covered calls yet again. I'll stay short in duration, but out of the money. I'm not looking to collect a lot in premiums. If I could bring in a couple of $100 a week, I'm happy with that. $200 a week being a target, that's $10,400 a year. That's nothing to sneeze about. That's real money. So if you're selling weekly call options and they expire worthless, you collect $200. Take your wife out to dinner. Have a good time. You know, consider it pocket money. Take some of that money out of the market. Use it. So we'll come back to this. Let's go to some of the symbols that I went over today on best stock charts for the coming week. For these purposes, I'm going to use TrendSpider. There's a link to their website below. If you're interested in their software, use discount code CT25Z. Again, CT25Z, that gets you 25% off. Okay, so first up, I want to talk about some observations that I made last week. And those observations is that you're seeing a chase for yield. You had seen the utility sector the past couple of weeks under pressure, yet there are buyers below. They still closed down last week, but they closed off the gap down on natural gas. All right, we'll go back to that. Okay, Bill, thanks for that. The high-yielding stocks are becoming very interesting. Remember, a lot of pressure on bond yields. If you're a fund manager and you have to be long of the market, why not buy the S&P 500, collect the yield, or even better, invest in names like ENB, EGY. They're paying a dividend. So EGY, Valco Energy, weekly chart. We're seeing higher lows. Let's throw over the overlays here. No breakout yet, but very, very soon on EGY, weekly basis. Rising RSI, rising Stokes, looking good. Yeah, I can go over LABU. That's one. I like to sell puts on LABU, so we're always watching LABU. They have weekly strikes. Let me write it down so I don't forget. You got it, Bill. All right, so EGY, looking good here, weekly basis, daily chart. We broke out on a daily basis, so we're looking for a pullback, retest of the breakout point. I'll set an alert here. If we touch it, I want to get advised pretty quickly. All right, so my note, keep this active for a couple of days. Set it and forget it. So we're good there. EGY looking good. HYG, is that not a junk bond fund? Am I wrong on that? Let's bring it up. I still got it. I haven't looked at this chart in a long time. I don't know. I'd have to look at the option chain. Would you sell puts? All right, so the way I approach selling puts is this way. I look at a put trade the same way as I would were I getting long of the stock. So to answer your question, let's make the assumption that you have a fairly fat premium out of the money put on the HYG. What about puts? Oh, you're looking to buy the puts as a short? Can you confirm that? So it's, I think from your comment, it sounds as if that you're looking to get short of high yield debt. Either way, whether or not you want to get long or short of the HYG using put options, you need to pay attention to what's going on with the price of oil. And oil is very weak. I mean, on Friday morning, swing trading today, oil was looking really good. I mean, it was breaking out. So you're looking to get short. Okay, I understand now. So oil, so let's discuss the high yield debt market a little bit. The high yield debt market is levered to the fracking sector. So if you ever look at a chart of the HYG or JNK, any of the high yield bond funds, and you overlay, I'm going to go over DPSTBA. Yep, you got it. If you overlay oil and the energy sector versus high yield debt, they trade in tandem. Very rarely do they diverge. They generally trade in tandem. So if oil is in a decline, normally you're going to get a pullback in high yield debt. You have a bit of a divergence going on here in that you have oil, which has been pulling back of late, yet you have high yield debt, which has been up these past several weeks, shrugging off oil. Let's bring up the USO really quick. I'm going to come back to this chart. Oil has been putting in lower highs. It's consolidating. It's not breaking support levels anymore, but it's not doing much on a monthly basis. Back to HYG. So looking at this chart, would I short the HYG? Probably not. Not now. I wouldn't buy puts, that's for sure, because you have time decay working against you. Let's drill down here. You can see that on a monthly basis, we have a lot of overhead resistance here. Let's go to a weekly chart. We closed out the week fairly good last week. We may rally up to this weekly resistance level here at the 87.35 level on HYG. Daily chart. Bullish reversal day on Friday. Would I buy the HYG? No. I'm not loving the trade here. Would I short it? No. I wouldn't short it either. Now, when does that all change? Let's go back to oil for a moment. Oil, if oil breaks, this is a daily chart. Let's go to a monthly chart. Keep in mind that we have the macro view of the global economy. It is breaking down. This is the government's own reports, right? The manufacturing sector here in the United States is in recession. It's validated. It's a done deal. So oil, if we break the support level here in green, let's get rid of this. Let's get rid of this. If we break the support level and break down below the lows of January of 2019, it's all over. You're going to see the junk bond market roll over. You're going to see oil and the energy sector roll over. So I would not trade HYG yet. Watch for a break on oil. If you get that break, then junk bonds are in a lot of trouble. So that's my thoughts on HYG. Let's go over, I'll go over the requests first. If any of you saw best stock charts for the coming week and you want me to do a deep dive on any one of the symbols that I went over EGY, CURE, CURE, Celgene, DPST, which I'm going to go to in a moment. Regional banks, CLB, COLB, ENB. I want to bring up ENB because I think I might have written down the symbol wrong. Maybe ENG. Yeah, I wrote it down wrong. ENB and Bridge. ISRG looking good. Healthcare, as I mentioned earlier. Folks, for those who are joining now, may I ask you to please click that like button. It really helps me out with the YouTube algorithms. Subscribe to the channel and click that bell button to get notified of when we go live next Sunday so you get notified earlier and you can join in. and it really helps me out with YouTube. Thank you very much. I appreciate it, and thanks for joining in on a Sunday night and spending your time with us. And if you have a question, please leave it in the chat box. That's the value of these live streams. Other stocks I went over today was REG and Zoom. I'll probably go over Zoom anyway, ZM the symbol. So if you like any of those stocks, I'll go over them. I'm looking at those stocks as we go into the following week, or this coming week. There's a video on YouTube and on the website called Best Stock Charts. I sent it out earlier today going over all of these charts from a higher level view, a weekly view. So if you want me to do a deep dive here tonight, I'm here for you. But right now we're going to go over your chart requests. So we went over HYG. Let's go to DPST. Now I mentioned earlier there were two sectors that I was attracted to. And the regional banks are one of them. And the DPST is a leveraged ETF putting you long of the regional banks. So thank you for those likes, folks. I appreciate it very much. Thank you. So you can see I already have an alert set here. I will be a buyer of the DPST this coming week if we break out on a weekly basis. So I like the setup here. We are in a consolidation. There's no guarantee that we're going to break out this week. My expectation is that we're going to see a lot of volatility in the regional bank market. The only reason why I'm semi-optimistic on the regional banks is because you have the home builders. I'll come back to this chart. You have the home builders which are breaking out. Look at KB Homes, ripping through the ceiling. So the home builders, you had building permits last week which beat expectations. That's a forward-looking indicator. What do people need when they buy a home? They need mortgages, right? Who benefits from those mortgages? The regional banks. So that's why we like this sector. I don't like it from a profit margin perspective because their NIM, net interest margin, is under pressure. But they'll be able to make some of that back on volume fees, servicing the mortgages and whatnot. So DPST back up. So this is the weekly chart. We're looking for a breakout here. Take note of RSI. Higher lows, no breakout yet to higher highs. Actually, we do have a higher high here. My bad. We do have a higher high. So I'm looking for a continuation breakout here on DPST RSI. That breakout failed. Now let's move on to a daily view. This is the value of having Trend Spider. No trend lines. Maybe we'll go higher. A little bit of topping action on Friday with trend lines. Okay, we have Houston, we have a problem. We have resistance up here. We closed right off of it. We rallied right into it and we backed off. So what this chart is telling us is that we need to see a close above this resistance level. I would entertain nibbling, scratching the itch on a breakout above that resistance level, but I wouldn't add aggressively until we got a breakout above this weekly resistance level here. Randy, I am concerned about the election cycle and how politicians like to beat up healthcare. Not good for these stocks. It's not really an issue. It's not really an issue. You make a great point, but if you listen to the rhetoric that's going on right now in Washington, healthcare is not the top of the list. It has been in elections past. Germano, it's been a while. How you doing, man? J&J, sorry about that, man. A little concerned. We'll take a look at it for you. J&J, I lost my pen here. I don't know how I did that. I haven't moved. Okay, so here it is. J&J. You got it. I'll go over it. All right, so wrapping up with the DPST, we're looking for a breakout on a daily basis. Your RSI looking very, very good. We have higher lows here, and we're putting in higher highs. Our Stokes, they're still down below the 50 level, but they're rising. We have your double bottom setup, which I always look for. And we are moving higher here. I am very optimistic about the DPST. Now, this time next week, if they're down, don't come back and say you said they were going to go higher. I don't know if they're going to go higher. I don't know how earnings are going to be. Most of these, not all of these, most of these regional banks are going to report earnings this week. So let's see what earnings looks like. Early on, at this present time, the chart looks very, very good. That all could change this time next week. So more to come. We'll keep an eye on it. Let's go to NEE. Let's go. I like to start from a monthly, weekly view. Let's see where we've been so we know. So we know where we may be going. Beautiful chart. No doubt about it. What kind of energy play is this? Is this a pipeline? Does it have a yield? So monthly view, obviously, the path of least resistance is to the upside. This is not a short by any stretch of the imagination. The only concern I have here, we are at current. This is the 20th of October, and we have put in, what was the high last month? 233.45. We have made a new monthly high, but we're not there. We've backed off that high. So I see that, and I have to begin to worry a little bit about whether or not we're going to get a new closing high. It's very important to me to see new closing highs. So the chart from a higher level view, definitely it appears that the bulls are in control here. Let's go drill down to a weekly chart. So weekly view, nice. Sam, you know me that well now, huh? He knows the charts I like. That's great. That's great. Yeah, it's a beautiful chart, Sam. But yeah, you have a couple of reasons to be concerned here. But honestly, now that I'm looking at the weekly chart, I'm less nervous. So when you take a look at this chart here, we've spent the past 3 weeks consolidating. Now, last week they tried to take it down. You had a new weekly low last week, yet they reversed it to close it positive on the week. So, obviously, what does that tell you? It tells you that you have, I would say down here, $225.57. That is critical support. I would write that down because if we close down below it, you're going to see some technical selling on NEE. That's too many. You got to give me a. You got to narrow that down a little bit. Give me your top two, blockchain. Let's go over. You know what? I'll go over all three. Forget it. I'll go over all three. You're always here. I appreciate the participation, so thank you. So NEE, you know, before I leave NEE, I want to take a look at the daily chart because I'm interested in it a little bit. This is a pretty chart. You're very close to a breakout here. I think that if you see a breakout and a pullback and a retest of daily support, if we get a new closing breakout, I think you could buy the shares. If you're still holding the shares, I would just simply do this. If you were long, I would just simply raise my stops to right below 225.57. That's what I would do. And I would buy this breakout here on a weekly basis more aggressively. On a daily basis, if you close on Monday, Tuesday, whenever, above this upper band of resistance, and especially if you get a retest and it holds, I'd be a buyer. You bet, blockchain. Thanks for being here, man. I really do appreciate it. Did you have me figured out, Sam? That's funny. That's so funny. That's great. Thanks for that. You made me laugh. Okay, so uh, let's go over. We did NEE. We have Baba. Let's do Baba. Now, there was some news out over the weekend about the Chinese delegation, their head delegate who has supposedly speaking authority on behalf of President Xi of China. He supported President Trump's statement that we're very close to a deal. Then they came out with another headline off of Zero Hedge that they're buying bucket loads of soybeans out of Brazil. So mixed information. That's why I didn't talk about it earlier. I don't think it's really having a positive impact on the market, as we could see from the futures action. So Alibaba, we are seeing a bad price action. I liked it back here. I like the breakout. I no longer like it. This is a daily chart. Let's pull back a bit. Higher level view. Let's get rid of this. For whatever reason, there we go. Okay. All right, so yeah, this is a tough one. So a daily chart, I'm not loving it. Monthly chart, a little bit more constructive because we are holding a bit of support here. Let's go to a weekly chart. The indicators tell me nothing here. Weekly chart. The best that could be said for Alibaba right now is that the breakout, which began here the week of September the 2nd, has not failed yet. It's still intact. But last week we had a bearish reversal bar. That would imply to me that we're going to pull back further. Will it be another retest of this red support level here at around 168? Spot 3.6. We're not that far away from it with stone's throw away. I think that we're going to hit that. The longer it consolidates along that support level, the more likely I would be to change my tune to the bullish side on Alibaba. But at current, I need to see whether or not this market is going to allow for these Chinese stocks to keep the multiples that they do have, and will they hold support? I'm concerned about that. So I'll keep an eye on it. At current, I would have to just say, let's just watch it. The Friday's price action, obviously a negative here. We'll probably pull back to the support level here. And again, between 168 and 165 per share. This is a rising uptrend line, so it's a moving object. So 168 in the next several days could be a really good support level. I would look to revisit the shares then. Right now, avoid. Yeah, it's a captive of headlines right now, right? It's an ADR. It's just a captive of headlines. It's a great company. I love it, but it could be up one day, down the next because of a headline out of Washington, much like everything else. But in this case here, even more so. So Alibaba, a watch. Let's take a look at J&J. All right. So when you see price action like this, and I want to talk about this for a moment. I always use the phrase that the market sends you signals, right? This is the beauty of using charts and learning technical analysis. Because were you looking at the charts of J&J prior to, and it's not just J&J, it was the market as a whole last week. But in the case of J&J, prior to their earnings report, you saw that, yeah, they were getting gapped up each and every day with the exception of the 14th. But at the end of each day, you saw selling. You saw sellers move in. We were higher, then we pulled back. That is not institutional accumulation. Institutional accumulation is high volume selling and closing at the highs of the day. We did not have that. So the markets were sending you a signal into earnings that you had better beware. Be very, very afraid. And for those that don't believe that there's still corruption on Wall Street, I skipped this headline because I didn't want to be a complete bore tonight. But I threw this up there for giggles. I don't want to get into the article. But Goldman Sachs banker arrested for insider trading again, right? Rinse, wash, repeat. We see this over and over and over again. So for those that are going to tell me that there's no way that nobody knew about the J&J report, I don't believe it for a second. So the markets were sending you a signal. Be very, very afraid here. Don't be a buyer of J&J in advance of earnings. Now, I digress. Let's talk about when you would want to entertain getting long of J&J. To make that call, I'm not going to use a daily chart. I'm going to pull back and I'm going to use a monthly chart, which is just looking absolutely horrible right now. This is horrible. J&J looks absolutely horrible. So at current, where we closed out the day on Friday is the rising lower band of support on a monthly basis. If this breaks, you're going to see a deluge of technical selling on J&J like you've never seen before. This is very, very bad. We've revisited this support level several times in the past. We have the monthly Stokes declining and down below 50. So I can't give financial advice because I don't know who each individual is I'm speaking to, and it wouldn't be right. So I from my perspective, were I an owner of these shares, I would keep a stop loss on a monthly basis down below this support level here. If we trade down below, this marks the lows of September, 126.32. We close out October, November down below that support level, I'm out. This is a bad chart because the reason why I cited the Stokes on a monthly basis, and it's really played out this month, is that what I teach members is that when you're watching the stochastics, the best value I get out of the stochastics is when they go down below 50 and are declining, because rallies tend to fade. So what I like to do is I look for a rally like NUGT. NUGT weekly Stokes are trending down. They'll flatten out probably this week or next, but they're trending down. So what does that allow me to do? I know that you're probably not going to get a breakout in that environment, so I sell covered calls. I'm digressing here. My point is that the Stokes are telling you that rallies will tend to fade. And that's what you saw this month. You saw a rally to new multi-month highs. But what happened? We faded. So these Stokes are absolutely horrible. I think that there's a very good chance J&J breaks monthly support. I would avoid these shares like the plague. Let's go to a 4-hour chart, see how they're poised to open up. We're probably going to get new lower lows here. I don't know how we closed out on a 15-minute basis or 10-minute basis. You know, I really don't use these charts all that much. I'm not a day trader. You know, 30-minute chart, we broke support. Looks like we're going lower here. 2-hour chart, we're going lower. I would avoid these shares. Absolutely avoid them. Sorry to be such a naysayer, but it's not good here. It's not good. Let's take a look at, we have J&J, Baba Dunn, LABU. Let's go to our weekly charts. So on a weekly basis, we had a good week last week in that we broke out above the 2 prior weeks. It's not a major breakout. You have a double bottom setup here on Stokes. but no breakout yet. We have one on the fast line, not yet on the slow line, but we're very, very close. We'll break out this week in all probability. Now, the reason why I'm a little bit concerned about LABU, I want to zoom in here, because whenever I see, like I just said about J&J going into earnings, the price action, whenever I see topping tails on top of these candlesticks, that's a sign of sellers moving in. So I get a little bit nervous. So at current, we're in no man's land. So I like to sell puts on LABU, and I think that we're in an environment at current where that can be done. I would look to sell where do we close on Friday? We closed at 30.78. Let's go to a daily chart really quick. If I wanted to get long of J&J, of LABU, I would be okay with selling, not much, small position, selling some puts at the 30 strike price, bringing in some premium. I like the chart overall. I don't like the fact that we're at resistance, so that's why I would sell puts, try to discount my price if they're assigned to me. I would sell the weeklies. I would not go out multi-weeks or out monthly. I would stay really, really tight with the time frame of selling puts. I don't think there's a need to hedge here. I like the 30 strike, but I would be really aggressively buying these shares on a breakout above this upper band of resistance where I have an alert. And you can see that last week it acted as resistance. In fact, I want to edit. It's not going to let me edit sensitivity. All right, so I only care about LABU on buying the shares, buying the common shares, not selling puts. I only want to buy the shares on a breakout above this upper band of resistance. I like the setup here, but it's a show me stock or ETF. It's got to show me that it has the strength to get above resistance. And if it gets above that resistance on a daily basis, that means that it's done so as well on a weekly basis. Because if you take here, let's do this. Go back to a daily chart. I can't edit this. It'll be a breakout on a weekly basis if we close above 35.29 on LABU. So I like LABU. I would be cautious here. Sell puts at I would sell puts at the 30 strike. Small position, just collect some premium, and I would buy more aggressively on a breakout on a daily basis. And it must close above that daily breakout. Samuel, by the way, NEE just goes down when there is a recession. When you get time, take a look at the chart of XD. XD, you will see XD. Can you clarify that? I don't think you meant this chart. Okay, so LABU, J&J. Let's go up to blockchain's request. Apple. I screwed that up. That's the Apple VIX. Why is it doing that? Okay, there we go. Fat fingers tonight. All right, so as usual, let's go with a monthly view. Using our monthly trend lines. So we do have a new monthly high. We're above it. New all-time highs. The question is on a monthly basis, do we close there? So Apple earnings is obviously going to be a big. Do you know when they report earnings, by the way? I'm not sure off the top of my head. I think that Apple will, in all probability, head higher. You have resistance up here at 245.08. Why do we have resistance at all-time highs? It's because we're extrapolating out prior highs to present day. So Apple is looking good. Let's drill down here. Weekly view. All right, so here was our breakout. Last week was our retest. Oh, I didn't know there was a smile. All right. I got you. All right. I'm still not great with these emojis. You're making me laugh tonight, Samuel. That's funny. My daughter would be calling me old man right now. You old man. All right, so weekly basis Apple is looking really good. This is a retest. I love retests. Daily chart. $9.30 for Apple? Or $10.30? All right, so daily basis, you're seeing topping tails here. Gotcha. Okay, 10:30. That makes sense. All right, so we have topping tails here. I got to say, you know, the market was weak on Friday, but Apple closed up. That's relative strength. I have to say, I'm bullish on Apple. I'm not a big advocate of Apple. I would just beware of the fact that if you are long or if you decide to get long of Apple, I would defer back to, as a matter of fact, I could stay on a daily chart here and I'll lay over the monthly overlay to illustrate where you have resistance. It's right up here. So you have about $8 to go before you hit monthly resistance. So just be aware of that. I would mark down the number. Let's say this is a rising resistance level, obviously. So it's not going to change much between now and the end of the week next week. So I would use 244 to 245 as your resistance level, and just beware of sellers moving in at that price point. No worries, Sam. All right, what else we got? Microsoft. I'll tell you, Microsoft is doing what Google has been doing. They're really moving in a lot into saving your passwords and things like that. Whoa, what the heck happened here? Saving your passwords, getting into other lines of business, and I'm really surprised to see this chart on a daily basis anyway. We're going to pull back. Let's take this off. Let's go to that higher level view. Monthly chart. All right, so what's concerning here about Microsoft is that we have a lot of resistance above. And they've been trying to take it down, but failing. So we're in a wedge formation here. And what has me concerned is this, is that while we've been putting in higher highs on Microsoft, we peaked out on RSI back here in, let's throw this up here, back here in September of 2018. And we've been putting in lower highs. Now, that's a concern. Now, could some of that be because we've been in the consolidation? Sure. But that only goes to here, May of 2019. What's been going on? What happened here during this rally up higher where you've had RSI declining? So we have a bearish divergence on RSI. That's a concern. Let's go to a weekly chart. In fact, before we go to the weekly chart, let's throw up our overlays here. All right, no real serious resistance above. Weekly view. Yeah, here's your consolidation range here. Very, very tight. I mean, if we do break out on Microsoft, it's going to be a rock solid breakout because there's a saying out there, the longer the consolidation, the greater the validation of the breakout. So I think that this is probably going to get resolved to the upside. But as the monthly RSI concerned me, so does the weekly RSI. But again, a lot of that could be chalked up to simply being in a consolidation. We had a bearish key reversal last week. Now to the daily chart, which looked horrible. And I think the reason why it looked so horrible before is because I had the daily trend lines up and we closed down below support. So either A, we're going to continue to pull back. This is really overly simplistic. We're going to either A, pull back, continuation pull back to this lower band of support, or B, they're going to gap it up early this week. Do we know when Microsoft earnings are? I keep hearing when tech breaks, the market breaks, and those were the most significant market caps off top. You know, the FANG names were keeping the market up. They were the lone horsemen going into that 2018 sell-off. But after that, I mean, if you take a look, let's wrap up with Microsoft, and I'll talk about we'll talk about Amazon, we'll talk about Google, we'll talk about the FANG names to talk about your high-tech comment. So Microsoft, from a daily view, I'm concerned. From a weekly view, if we break out above 141.68, I'd be a buyer of Microsoft all day long. I think we are going to go a lot higher here. And here's your rising upper band of support. I like it from a weekly basis. I like it from a daily basis, not a daily basis, from a monthly basis. On a daily basis, I have my concerns that we may see short term. That's it. Longer term, I think it's going to break out. Just beware of that RSI diverging, please. The 23rd of October. All right, so there's our catalyst. An interesting play might be here is to open up a spread if you're betting one way or the other on earnings. And you can play Microsoft that way. I'm not a buyer of common shares into earnings. I may get a bit speculative if I think earnings are going to beat or miss, but rarely do I do that, to be honest with you. Yeah, the banks held up on Friday, and I think they're going to continue to hold up. The regional banks report earnings this week. Let's take a look at Amazon. All right, so getting back to the conversation with regard to what blockchain brought up was, can the markets continue higher without the participation of big tech? I think it can, but you need to have the banks. The banks must rally. I don't think that the market is going to be able to rally without check if the banks don't move higher, and the Russell 2000 must break out as well. So ideally, tech breaks out. It'll help keep a bid under the markets. You had the SMH, the semiconductor ETF. We'll come back to Amazon in a moment. You had the semiconductor ETF breakout. Last week, and then it reversed to close back down below support. So a false breakout on the semis. I'd like to see the semis break out. If they don't, a healthy breakout in this market is going to be, either way, a healthy breakout in this market is going to be under a lot of scrutiny, whether or not it continue. If you don't have beta, meaning tech, joining in, and you're relying solely on the banks in a horrible interest rate environment for them to make money, I mean, that's a market that's built, or a rally that's built on a house of cards, and you take out one card and this whole thing can come coming down really quick. So that's why on a breakout, I want to be hedged with this market. And folks, a lot of people still on here. I'm assuming a lot of them are new. If you haven't hit that like button, can I ask you to do that? Hit the subscribe button and click that bell button so you get notified when I get when I go live on Swing Trading Today in the mornings. It's 5 a.m. or 6 a.m. Yeah, 5 a.m. Eastern Standard Time each day, Tuesday through Friday. And there's a replay on the YouTube blog and also on the website if you want to watch it later in the day. And I also have a podcast out there. You can listen to the replays throughout the day. Click the link below. It'll take you over to the website, Podbean, and you could sign up through Google Play, Spotify, and next week Apple will be up and running as well. So let's go back to Amazon. So Amazon is looking good. They attempted a breakout last week. That breakout was rejected. You can see the topping action here. So what the markets told us last week was that we have resistance right here at 1807 spot 58 on Amazon. Let's overlay monthly resistance. We have a lot of room here, so no monthly threat here of resistance above. Let's go to a daily view. All right, so taking a look at the weekly chart, if you look at this alone, I wouldn't be a buyer of Amazon using the weekly chart. However, when you look at this chart and you see the pullback, you have to take a look at the daily chart because it tells you a different story, which makes me more interested in Amazon, because what we did here is on Friday, we retested this breakout point. So we broke out here on the 15th, rallied, pulled back, did a retest. That's great stuff. That's really great stuff. So while I wouldn't be a buyer of Amazon on Monday morning, I will be looking at it and looking to see whether or not we pull back yet again, retest here, and it may take a few times before you get confidence on the part of longs to go heading in and buying Amazon, especially into earnings. And I would consider after earnings buying Amazon. I would not buy the shares into earnings. That's just me. You know, that's just me. Other people have no problem with it. If I did buy into earnings, I'd buy a hedge using put options underneath. So Amazon is looking good, constructive. 4-hour chart. Here's that breakout on the 15th. We're pulling back again. We're retesting support levels, and that's all good stuff. Oh, they've been selling shares of Amazon, huh? Okay. Good feedback. I was unaware of that. Cup with handle. What on cup with handle on Amazon? What time frame? Weekly. I'm not really seeing a cup with handle. I don't use this much. What TrendSpider has is pattern recognition, and they don't look to have. Jake, if you're Jake from TrendSpider, if you're on right now, am I missing cup with handle formation here? Is it a different name? If you're alluding to this here, I wouldn't agree that we have a cup with handle formation here. Not on a daily chart. I'm not seeing that. Normally, you form a cup and you get an orderly pullback. This is not an orderly pullback. But in any event, you would want to buy the breakout above the pivot point, and that pivot point would be right here. And I wouldn't buy it on a rally up and through the highs of the 17th. I would wait until 1800 on Amazon before I got aggressively long. I would buy it down here on a retest of the breakout point. Right there, your indicators. Oh, you're talking about on the indicators. Again, though, I see what you're talking about. You could divine that, but we do have a new. Normally, you don't get the right side of the cup above the peak, right? And you're getting that downward sloping handle now. Yeah. Normally, that downward sloping handle would occur prior to reaching a new higher high. So technically, in my textbook anyway, the way I do things, and sometimes it's different than other people. In my textbook, it's not technically a cup with handle formation. You could prove me wrong by looking up a definitions guide on in some book or on what is the website? Investopedia. But I like this setup here on Amazon. I wouldn't be a buyer on Monday morning, but it looks interesting to me. And with that, folks, absent any, well, we went long here, 7:21. Absent anything else, any questions, suggestions, feedback, I'm going to say goodnight to you. I really appreciate you spending your Sunday night with me here. Time well spent. I enjoy the heck out of it. I love the feedback and discussion. And if you haven't taken the survey so far, there's a survey below on YouTube. And if you could take that for me, it's the same survey for those who took it a couple of weeks ago. You don't need to take it again. No personal information is requested, and it takes like 2 minutes to fill out. It gives me the opportunity to get feedback about what pain points that my viewers are experiencing, what experience level that you have, and that way when I put out my course, I can address those issues dead on rather than puffing out hot air, which is not good for anyone. You're very welcome. Blockchain, everybody has their own ways of looking at things. My way, it may not be the same view as somebody else has. So it's all good. John, you're welcome, my friend. Thanks for joining in. I really appreciate it. CB, you're very welcome. Blockchain, you're very welcome as always. Thanks for your participation. Everybody have a great night. And hit that like button if you could. And I will talk to you throughout the week. Be well. Mr. G, you're very welcome.